What's up, guys? I am coming to you live. Take a look at this 1:20 p.m. just after the official market close, the stocks, right? On Thursday, 6:15, we're looking at Bitcoin here, right? So, weekly freaking charts. You got to look at the weekly charts, you got to look at the monthly charts, you got to look at multiple time frames in order to have the best opinion. This weekly chart looks like pretty darn good. We just came into the first test of the 10 EMA. It went kind of parabolic off the rails for a bit. This indication right here, this is a week, right? So this is the first outside and down week in quite some time, way back into March, I guess. So these are dips. So if your strategy is buying dips in a bull market, then you're not very concerned. If you're over leveraged, if you are not prepared for any sort of pullback in markets, you probably don't trade, or you probably don't manage your risk. So right now, the weekly chart is good. Okay, so let's look at the daily. So we're going down the daily. Excuse me, I don't use this platform that much. Look, oh wow, isn't that funny? The 50 SMA is simple moving average on the daily time basis. Look at that. It coincided, the 50 daily simple moving average coincided. There was confluence, look it up if you don't know what I'm talking about, between that and the weekly 10 EMA. Believe it or not, this happens quite a bit. So then you also look left, young man. So 1920 around there was this kind of previous low. And then I'm also looking at the structure of what's going on. So this gives us some sort of indication whether the pullback can be bought or not. And it's kind of, so look at the 200 way down here at about 1300. I have some Fibonacci extensions, which I'll go into in a second. But let's take a look at the 4 hour now. Okay, the 4 hour, we're beneath the 200 on the 4 hour. So that's interesting. Okay. And then you can kind of see the structure more. So you can see this leg down, this leg up, and this leg down that we're still in that, right? Not gonna say it's over, but isn't that interesting? What is kind of the shape of this? This looks rather ABC. I'll show you another kind of count or variant as well. What do we know about Bitcoin? We know it's over leveraged players. We know it's a lot of margin, funny money games playing. We know that there's a lot of volatility. So that's keeping that in mind. We know that there's big time swoops down that kind of don't really matter that much over the long term. So that's why you got to be careful with position sizing and also your stops. So again, look at the shape of this. This looks like kind of 1, 2, 3, 4, 5. So that's generally a 5-wave down sequence. And then we, from 1920 around there, we began to move up, and then pulled back, and then began to move up, and then pulled back and took the stops out from this level. But after that, it was off to the races. So 1 up, 2, 3, 4, 5. You could argue that. And then again, this isn't set in stone. I use Elliott wave as kind of a confirmation. Like I mentioned earlier, a confluence. So there's a bunch of different variables and they add up, and then that means I'll take a position or not take a position. So now what I was thinking here, I tweeted out, go check it, at 3,000 overnight, whatever this was, regret minimization. Regret minimization is a Charlie Munger, Warren Buffett type. I doubt they were the first people to ever, relate it. But basically, you take some off. When things go straight up, you either have to reduce your risk, or well, your main goal is to reduce your risk, right? You don't usually pyramid into stuff this late in the game. You know, if you bought in at 400 or 1,000, whatever, if you're adding and getting crazy at 3,000, it's probably not a good idea. The risk reward gets skewed at that point. Anyways, regret minimization. So I was looking at this as an originally in here. I'm gonna zoom in. This is pretty deep, so if you're not prepared for it, click off of it. But if you want to learn about trading, if you're interested in Bitcoin and a technical analysis approach with multiple factors from a guy who's been doing it for a bit, then maybe pay attention. So I originally thought of this as a 1, 2, 3, 4, 5. Okay, so I thought maybe the correction's completely over. So I want to give so I actually initiated a new trade, 20 somewhere in here. I initiated a long trade, and my risk was like down in here, the 2,500. So it was like risking 100 to I was targeting new highs. So 5-to-1 risk reward, somewhere around there. And then look what happened. I was in the green. I went to sleep at around 2,700. I was like, oh, that's a nice little trade. Wow, look at me. Pat myself on the back. I'm so smart. And then overnight here, I got stopped out. So I lose money. It happens. Guess what? It's called fucking trading. That happens. All right? It's real life. All right, so now I'm looking at it as maybe this whole thing, because it was a 5-wave sequence, is a 1. This is not very good for Bitcoin in the short term. Because if this whole thing was a 1, you can see I took this 1 and then I put a Fibonacci extension starting here. So we're going to zoom out again. Let's take a look at this. Usually it's 1.618 of the relationship between 1 and where 2 ends and the length of 3. So this length of 3 would suggest that one area where it possibly could go is around 1960. This is not precise. You can't put a buy order at 1960 and put a stop order at 1959. It's not that freaking good. It's just a general idea. You can use bar kind of strategies, reversal bars on an hourly or 4-hour to manage risk. So somewhere around here, you know, you're going to get involved, and you're going to also expect, if this is the 3rd wave, then you're going to expect a 4th wave that's kind of sloppy, and then a 5th wave down. So if that's true, you know, we could be seeing back down to 1,500. That's just a possibility. Don't freak out. What would we need to see? So it would, then like the 4-hour chart, it would lose again, you know, in the next couple of days to the 200, and it would stay under the 200. And also this kind of 3rd wave down usually takes the form of a 1, 2, 3, 4, 5. It doesn't really look that way right now. If I look at it on the hourly, I mean, I'm just grasping at that. You always look at these little formations where it starts, and then you see this retrace, and then that's usually the 1. So if that's the kind of 1, and then, you know, you'd have to start there because this is lower. You can't start there. So it looks like this 4th wave was kind of ABC. And again, I'm just explaining how I think about this. This is not super in-depth, but it helps me with the trade as well. Hopefully it can help you about the way I would look at markets. I've looked at a lot of charts over the years. usually there's going to be a volume flush as well. So volume, I mean, this is a 5-minute chart, so let's go back. Let's look at a bigger time period. I always want to look and study, especially if it's a new market or you're not that sure. You kind of want to look back at what happened before, at these big moments, big changes, inflection points. So look, there's this volume spike way up here. So look, we got this volume spike way up here. Got a volume spike. So yeah, that happens at market changing points. So if I were to initiate a long position, the other thing is, look at these tails. Look at how at this inflection point, they just bought it right up and they closed it up here. Up a couple hundred points, right? Which is pretty significant. And then it was, it bobbed around, it pulled back, and then went off to the races. So you have time. You do have time on your side. You don't need to go rushing in and buying right now. I am talking out loud about this position, possible position. I have yet to initiate it. If this were an ABC, then a lot of times there would be a certain relationship, 1-to-1, 1 to 0.618. So being that I measured this A, this B, and then this C, let's get in here and let's do, so show me the 1.0. It's not working. I said show me the 1.00. Okay. Ooh, look at that, 2302. And what did we get? We got a reversal, possible reversal. It closed, didn't close completely over this, but that's interesting. So again, we're at an inflection point. The 4-hour chart, the 200 is, I'm gonna call that resistance. I'm gonna call this 2300 an interesting, inflection point. I'm gonna call this dump in volume and then buying it back up. It's interesting. At 2300, you can target, you have 700 bucks essentially worth of potential profit. So you can put a couple $100 of risk on and still be good. Would I want to do anything right here, knowing that, okay, let's say I put a stop under here at just under 2,000, and then that 1.618 is 1979. So realistically, no, I'd rather put on a smaller position, right? And have the risk beneath this level at like 1880 or something like that. So now that's skewing your risk and reward. If you have to risk 500 points to make 700, it's probably not worth it. Hence, for right now, there's no trade. That was a very long video, but I've been getting requests to go more in depth, and that is very in depth on this particular market, Bitcoin at this time. Appreciate your time. Like, subscribe, comment. You gotta feed me likes and comments and questions. Otherwise, I'll blog about something else. Peace.